Come on, 2, 3.
Well, good morning. Welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN AM for Monday, December 27th, 2021. And our top story today, markets were volatile in 2021. What's the outlook for 2022? Joining me now to discuss this and a lot more, Larry Shover is the Chief Investment Officer for D. Alexander Capital. Larry, Happy New Year. Great to see you. Thanks so much for joining us on the program this morning.
Yeah, thank you so much. Great to be on.
So before we head into the new year, Larry, lots going on in 2021. We've had the resurgence or emergence, I guess, of the Omicron variant. We have seen the Fed telegraph potential interest rate hikes in 2022 that we'll get to in our second segment. But give us your overall thoughts about the market this year, 2021.
Well, at the end of 21, to me, it's like we're in a much different place. And I wouldn't say it's all better, but a lot better. I mean, we have made progress with the pandemic. And I know that doesn't feel that way given Omicron, but overall, we've come a long way. The Federal Reserve has been very upfront about tapering their asset purchases, which means they're going to stop buying mortgage-backed securities and go towards liftoff of interest rates. And keep in mind, economic footing, we're really on a lot more solid footing than we were a year ago, or at the beginning of the year. We've added 6 million jobs, and far from perfect, but in a much better spot than most people would think. And inflation expectations have kind of plateaued, at least for now.
Yeah, and Larry, I think a lot of people out there, look, people, I'm not saying they chase returns, but they are aware that the media reports what the markets do each and every day. I think people may be a little bit nervous, but investing is really, for most people, including myself, maybe yourself, is a long-term game, buy and hold. So even if you're near retirement, 5-10 years away, there is a chance that this volatility will go away and we'll see things kind of continue to increase over time.
Yeah, exactly. I think one of the biggest mistakes people make, me included, is trying to figure out what to do. Like, should I sell? What I'm watching on TV makes me really nervous. And one exercise I always do for myself is just think back over history of all the times I would have sold. And it's amazing what's happened to the market since then. Especially if you think of the pandemic, when the market went down so much and there's a lot of people sold. But on the other hand, you need to be in a spot where you can recover losses, because the markets don't have to go up every year. We know that. And every day and every year is different. You just want to make sure that if you're 10 years away from retirement, your allocation to equities perhaps should be different than if you're 20 or 25 years away.
Yeah, really good point. And I love the fact that we don't cover markets every day on this program, that we view it as a long-term approach. Larry, I think you hinted to this, really making sure that you're looking at your financial instruments, whether it's fixed income or stocks. And in the fixed income category, if you want some level of protection, there are products available that provide some downside risk protection. Yeah,
there definitely is. And I think they call them tips, but it definitely does give you some downside protection versus inflation, but you pay for that insurance. So you have to really, weigh that heavily with regards to, does that make sense to protect myself with inflation? But historically, overall, and this is historically speaking, the mix between bonds and equities have provided protection, because as we have seen with history, when stocks go down, most times bonds will go up. Now that's not magic. It's not written in stone, but that's what seems to happen, or has happened historically, as people run for cover and put their money into something. They usually put it into U.S. government treasuries.
Larry, I want to ask you about cryptocurrency. We have seen this year a lot of volatility in cryptocurrency, Bitcoin, Ether, Ripple. There are lots of, I mean, there must be dozens, if not hundreds of cryptocurrencies out there. And I often get the question, should I be investing in cryptocurrency? And I say, how prepared are you for the volatility? When do you need your money? Maybe a little smattering here and there. But when you look at cryptocurrency relative to stocks and bonds, what are some of the things that you think about when you're advising investors?
Yeah, well, I take an outlier approach to cryptocurrency. I have to talk about it. I do watch it, but I don't trade it, and I don't encourage people to invest in it because I think at the end of the day, it is a tool for speculation, and the people who are trading it are just want that speculation. They want that volatility. And the fact of the matter is, like, it's not acting as a currency. It's not acting as a commodity. It's just a speculation tool. I'm not saying it's necessarily a bad thing. It's just with the volatility in mind, I just would not advise anybody to invest in it unless they're willing to absorb those kinds of swings in their price.
Yeah, and going back to the first part of our conversation about long-term investing, if you're a buy and hold person over time, things tend to appreciate, but you got to be prepared to handle the risk. Last question for this segment. We're coming up on the end of the year, Larry. That means taxation and taxes, federal, state, local taxes, things that maybe you're thinking about as we're going to segue into the second segment about Outlook 2022, but things you're thinking about from a tax perspective when you're talking to your clients.
Yeah, tax perspective. And I live in a high tax state of Illinois, so it's something to really be mindful of. But I think people often overlook some of the tax advantages there are to rolling or to just getting general advice, because that is part of the return profile over time. Because if you take taxes into consideration, it's a big drag on returns. So whether it be municipal bonds, whether it be local municipal bonds, I would do whatever I can to get a tax advantage, because that just adds to your return. And I know it sounds like I'm overstating the obvious, but I think a lot of people miss that obvious.
Yeah, well, I think now's the time to think about, now's the time to do planning, Larry, as we're getting ready to go into 22. It's just a few days away. Larry, I want to take a quick break. When we come back, we'll talk to Larry about Outlook 2022, things that he is looking at. We're not going to provide you investment advice, but we're going to just talk about some of the things you need to look out for. You're going to want to stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
You need a financial plan that fits the way you want to live in retirement. A plan that can help grow and protect your money, now or in the future. With an annuity in your plan to help cover essential expenses, you'll have the freedom to live the retirement you want. This is what an annuity can do. Find the right financial professional to show you how. Learn more at protectedincome.org.
Are you stuck with a low credit score? A credit report and score that's causing you to be denied credit or pay higher interest rates than others for the same things? Then do what Terrence did and call Credit Repaired for your free credit evaluation to help restore your credit.
I started thinking about buying a new house, and my score wasn't where I needed it to be. I called and spoke with one of the representatives, and we just had a good conversation, and I liked what he was saying.
Just one call for his free credit evaluation was all it took to start back on the track to repairing his credit.
I'm seeing the deletions and I'm getting the report, so I know something's being done. It does make a difference to me.
All it takes is one call to get started.
Credit Repair has given me a second chance to have a better credit score.
Don't let a low credit score hold you back another day. Do what Terrence did and make the call for your free credit evaluation.
Call 800-819-4152. That's 800-819-4152. Again, 800-819-4152.
Welcome back. We're talking this morning to Larry Shover of D. Alexander Capital. Larry, thanks so much for sticking with us this morning.
Jeff, thank you so very much. Look forward to the second segment.
Yeah, this is going to be fun. I really enjoy getting your insight. I mean, as Chief Investment Officer, you have to look at both economics and the markets to do your job, and getting you to share your insight, really important. So let's talk about 2022. Let's start with the Federal Reserve. We got some news, I think, last week around potential rate hikes, but what are you thinking about in terms of the Federal Reserve and their actions going into the 2022 year?
Yeah, well, the Federal Reserve has made it abundantly clear that they're tapering, and we're going to see 3 rate hikes in the next 2 years, perhaps the first one as early as June of next year. And the market actually has absorbed that without, I mean, there's definitely some volatility and some digestion of that news. But, you know, a couple of weeks past, it seems like the market has moved past that. If you look at the interest rate curve, something that, you know, we as traders and investors look at all the time, it definitely it's pricing in those rate hikes. So the market doesn't seem to be frightened with it. If it was, we'd see a big reversal in the equity market.
Larry, inflation has been a real challenge, especially for those on a fixed budget. They have a fixed income. Maybe they're drawing Social Security. Maybe they are finally retired. When you look out, and I know you mentioned the Federal Reserve over 2 years will be raising rates. I think that's done as a result of looking at inflation. But what do you think about inflation going into 2022 and looking through the year?
Yeah, it's a good question because I think the headlines are all about supply chain issues and logistical issues, et cetera, et cetera. And I know that, and we all know that there's something to that. But I do also believe that longer term inflation expectations are lower than what we're seeing right now. And it's largely due to the enormous demographic shift we have in the United States, with a lot more people older than on the younger end of things. The savings rate is very large, and money doesn't have the same velocity through the system that it once had. So yeah, we're definitely seeing inflation, and it definitely nagged. It's been persistent, but I don't think long term it's going to be as big of an issue as perhaps the television stations are making it out to be.
Well, you know, they have to drive viewers
Yes.
and sponsors, and that's kind of what they're selling. Larry, let's talk a little bit about companies and this Omicron variant. You know, we have been through a real challenging time, both here in the U.S. and abroad. Every part of society affected by this horrific pandemic, this disease. But people still working from home, maybe they're going to a hybrid role. What does all this mean in terms of what you're looking at in terms of companies, large, small, mid-cap size companies?
Yeah, well, first of all, just absolutely impressed with how companies have perhaps jerry-rigged their whole way of doing business because they were forced to make a change. I do think that hybrid form of working is here to stay, and I think the pandemic just fast-forwarded that. I mean, how many people have you talked to whose companies had a policy of never working from home, don't work from home, but now they realize, hey, we can get this done, that perhaps the hybrid is to stay. But also, like, I think to your point, The Omicron variant was fast and furious, and I think we'll continue to see those kind of variants. That's just the nature of how these things work, and they spread much more quickly, but they also don't have the same effects as the ones prior. So all that to say, I think we'll slowly but surely see a work from the office normality, but it'll never be, in my opinion, it'll never be the way it was before the pandemic started.
Yeah, sorry to interrupt you. I think I agree with you. I think that this is kind of the new normal. This is what things will look like. Larry,
Yes.
last question, and 2022 is a midterm election year, and I don't want to talk about politics. We don't do that on this network, but let's talk about the impact of midterm elections on the market. What are some things that you're looking for as we get into congressional races? A third of the Senate is up. We're getting ready for 2024, which is 2 years away. Well, just a little over 2 years away. But look, at the end of the midterms, that you start talking about the presidential election. But what are you thinking about in terms of government spending, both at the state and local level, and how to process this through markets?
Yeah, so the midterms typically aren't as volatile here in the U.S. as they would be to other currencies, to other interest rates, but that doesn't mean it can't be. And I think the issue this year with the midterms is I think the market is expecting more stimulus, expecting more spending, which will boost GDP, which will boost the stock market, or theoretically that's what it's supposed to do. And this is the first year in, I think, 2 or 3 that we're starting the year without any stimulus. And so with that in mind, if we get into midterms, I think what people are expecting is logjam, nothing's going to get passed, nothing's going to get through. And that's going to act or potentially act as a drag anchor to the markets. Doesn't mean that the markets can't continue to grind higher. It's just that, business as usual, logjam, typically infer that they're not spending money. So therefore, we're not going to see the fiscal stimulus that we've seen in the past that has sparked the markets.
Yeah, I think they often refer to elections as like, I don't know, what do they call it, like the crazy times. And I think that will be interesting to see all the rhetoric, but it'll be interesting to see the midterm impact on the economy and on markets. And we'll have Larry back to do it each and every month. Larry, thank you so much for joining us. Wishing you and your family a very happy and healthy new year. And we'll talk to you in January.
Thank you so much.
That wraps up this episode of BRN AM. Have a topic of interest, someone you think we should talk to, drop us a line. And don't forget, for all the information in finance, tech, wellness, lifestyle, so much more, all in one place, check out today's edition of our daily newsletter, The Morning Pulse. Want to search our archives or check our latest content? Visit our streaming partners, Amazon, Roku, Samsung, and over 100 more. We're back again tomorrow. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes. Now is your opportunity to co-create content around any topic on the First Lifestyle and Wellness Network. Reach a global audience through our platform and co-own exclusive branded content. All of our programs are available on demand and also as audio-only podcasts, so you can take us on the go. Broadcast Retirement Network, available anytime, anywhere, and on any device.
Are you being audited and do you owe the IRS $10,000 or more in back taxes? Is the IRS threatening to take more of your money? Don't fight the IRS alone. The Tax Doctor is here to help you negotiate your tax bill and reduce your stress. The IRS can freeze your assets and seize your bank accounts, but you can stop these IRS actions. The Tax Doctor will work with you using our years of experience to represent your case to help you get the best resolution under the IRS guidelines. Help is here to deal with the IRS to reduce your stress. We've handled thousands of cases, so we know what we're doing. If you owe $10,000 or more in back taxes, do not call the IRS alone. Call a Tax Doctor now for a tax emergency analysis.
Call 800-224-6439.